Now, back in 2022, Andreessen Horowitz wrote a post announcing their investment in you, in your company, Flow, $350 million at a valuation of roughly $1 billion. That was now almost 3 years ago. Are you looking to more financing now because of the growth you're experiencing and the amount of buildings that you are buying?
So I think it was more like 2.5 years ago. And we weren't necessarily looking for financing. As things are progressing, a lot of opportunities came our way. And an offer to fund the business came from a third party. And around the boardroom, Andreessen Horowitz decided that they want to re-up their investment. And then I had the opportunity to invite a few people who've been hanging around the hoop, but people that I thought I could learn a lot from. And if they were added to the cap table, would be very beneficial. And so yes, we did do a quiet round about a month ago. We haven't announced it yet. And but it came to reality sort of as the growth was happening, and our growth is happening in multiple places at the same time. Also, Flow is planning to turn profitable this year. So we're not sure there's going to be another opportunity for partners to come in, at least not until a much further time.
So how much more money did Andreessen Horowitz put in, and did anybody else get into the round?
So a few other, I'm not going to share the exact number, but a few other people did get into the round. They put in a substantial check. They led the round for a valuation north of $2 billion. But the people we added, we were very picky about. So we're actually looking, so I'll give an example for one person without saying their name, an entrepreneur who's done a great job giving me advice for the past 8 years. And over time, I've noticed that it's not necessarily what I want to hear, but it's extremely helpful. And I've learned how to be a great partner with him and be a good listener with him. And it's been amazing. So he's an example for someone who's going to join this round. So people that we think can bring value, added to the cap table.
So is it mostly private money then, or are you also looking to venture investors or even other real estate investors?
So we've actually had a few offers from venture investors. For now, we've decided to not even explore that. It's mostly private money. But then separately from that, there are real estate funds that are not in the cap table that are offering us large amounts of money to buy real estate. But that's not from Topco, so that's not part of the equity stack. That's separate funding and separate fundraising. And that, it's been public. We raised a $300 million fund in Saudi, and we just did a deal with a publicly traded company in Israel, which is more like an open-ended fund, because they have access to retail investors and institutional investors that are interested in buying in, right now, South Florida.
So what is the long-term goal? Do you think that this is a company that you could take public one day?
I'm sure this is a company that we can take public one day.
Do you have a timeline? I mean, is this something that you're setting a goal to that ultimate outcome for, or are you first having another goal in terms of how much you want to build in terms of residential real estate and condos?
So something beautiful about my partners, Mark Andreessen and Ben Horowitz, and David George. All three of them attend our board meetings. Mark Andreessen is the board member, but David and Ben attend the board meetings. We get to discuss very openly about exactly topics like that. And because we are still very young, only 2.5 years old, we have optionality right now. We don't need to rush. We have really doubled down on South Florida. We've made a big investment in Saudi, and it's starting to work out extremely well. And for the next 6 months, we are focused on those two things and to keep building the technology backbone that runs all of it. In Saudi, we run the entire building just on our technology. And the reason that's unique, in America, there are back-end systems that run buildings. In Saudi, we're using our system to run the entire building, both from the back and the front, which allows us a lot of flexibility and allows us to really respond well to the market needs. So for example, an example in Saudi, there's a government product that you have to be connected to collect rent. For other systems, I think it would have taken a second to connect. We did it in a few hours. And once we're connected and everything was working really well, we can start operating in Saudi. And in Saudi, we operate as a Saudi company. Those are all things that we're capable of doing because of the flexibility that was created in our systems.
Adam, how is this business most different from WeWork?
I think what I just said about the partners thing, the main things is the partners and the team are extremely different. So we have a board that's very opinionated. On our first board meeting, Mark Andreessen called me after the board meeting and said, Adam, I promised you that I was always going to tell you what I think. I thought it was going to take more than one board meeting. I have a big thought. After the first board, there's something that was presented by you and the team that I think is risky, and I really want to talk about it. And I said, thank you, Mark, and we discussed it. It had to do with interest rates. And he didn't like, which he's right, no forecasting interest rates. Our team 2.5 years ago sort of was able to forecast what's happening today, and they were pretty accurate actually about what they said, but they could have been wrong. And his point is no one can forecast interest rates. And he said, I don't want to make a plan on something that we don't control. And even though it sounds like a small point, it's not at all, because it created a great relationship between him and me. I hope it made him feel that I was ready to take the feedback the next day. And then we took his feedback very seriously as a team. And we changed that and we implemented that. So I think that WeWork had a board that for 9 years voted unanimously yes on every single decision until the last one was a no. So I think that's very different. I think the other change is the team. I think we have this excellent team that was hired because they're very comfortable arguing and really holding strong to their opinions no matter what. I think for an entrepreneur like myself, that's extremely helpful. Sometimes it makes the discussions longer, but I have so much respect for the team that even though we might talk about something for 2 hours that I think could have taken 10 minutes, regularly in hindsight, the solutions, the conclusions we come are much better. Third is the business model. Residential real estate is 70% of 40-year-olds and younger are renters in this country. They spend a third of their income on rent. There is no brand that I'm aware of doing it. And for me, definition of a brand would be people actually would need to come in and look for it. So when I think about a brand, we were talking about on our walk, if residents want to move to Miami, are they going to search, what brands are they going to search for rentals? And as far as I know, there are no brands that they're going to search for rentals. They're very large rental companies that own a lot of real estate in Miami, but no one's looking them up. They search the location, and that's how they get. They come to Miami, they actually search Flow. They heard about us through the website, through our social media, through our events, through Instagram, whatever the way that they heard about us, and they search through Flow. And the exact number is 92% of all leads in Flow come from direct consumers coming to our website directly. The average in the market is close to 90% from brokers. So it's completely flipped. So now you have this brand that's bringing all of this together. So it's a business model that's very core. The other thing I think in Corona, we all learned that the home is, I think for most of us, the most important thing. People didn't go to the office, that was not a problem. They started working from home. And so you could take your office into your home. You obviously can't take your home into the office. So flow is isn't the basic need of Maslow's hierarchy.
I do want to ask you a little bit more about going from WeWork to Flow. And in that, I want to ask about the conversations with investors. What has it been like to have conversations with investors? Of course, at the tail end, it was the fastest growing startup in history, but it lost value very quickly, of course, and eventually had led to a bankruptcy. So what was rebuilding trust with investors look like? Do you have to talk about the WeWork story a lot?
So a few thoughts. We live in an AI world today where a company can go from 0 to 40 billion in less than a year. It took us 9. So yes, it was the fastest. That was a long time ago, and things were very different than from today. We didn't seek out any investors for Flow. It was actually the way Flow started started as a trade. It was Corona. I moved to Miami. And as I was living here, it's funny, a lot of people say Miami has no culture. People like to say Miami has no culture. I disagree completely. Miami has amazing culture. New Yorkers like to come to Miami saying, we don't like the restaurant, we don't like this, we don't like that. Miami has amazing culture. The main culture I've observed in Miami is a culture of community. And there's the Argentinian community, and there's the Mexican community, and there's the Jewish community, and there are all these different communities all around Miami. Miami's projecting it. So when we got here, we started looking at these big residential buildings, the one we're sitting below right now, one in Fort Lauderdale, and we had the third one here. And I felt like it could be a great opportunity to buy them. There was no plan to build a brand or do any, Flow was not in the works. And all we thought it was a trade. We thought cap rates are wide right now, interest rates are the lowest they've ever been. We can buy this real estate with our own family, with our own private money, take debt, and do a trade. Over time, interest rates would compress. cap rates would compress because they follow the interest rates, and we will sell the buildings. And that's what we did with the first one, and it worked out very well. But as I started walking the buildings, the entrepreneur in me couldn't help it but say, wow, we live in a world where people, and this was Corona, everybody was on their phones, in their apartments. Miami was a little different because a lot more things were open here, so people are outside more. But people were very connected digitally. And it felt to me, if people are disconnected digitally, then they feel very disconnected physically. And I just walked these buildings and I said, wow, it wouldn't take a lot to change these buildings from sort of what we're used to, these towers, to be, I think, a little soulless, because a lot of the people live, that's why people churn, average churn in this category is 50%. So you'll spend an average of 2 years in any of these buildings and then move to another one. In our building, people stay substantially longer. I looked at it and I said, what a great place to build a community, and it won't take that much. And that's what we started doing. And then A16Z approached us. We didn't go out, we didn't raise money from anyone. We both decided that we need to get to know each other first. So we spent 6 months really getting to know each other, ensuring that we would make great partners. And after that, we moved into doing flow, and that's when the business launched. Even in that point, we didn't launch the brand. We still took a year and a half until April of 2024 to build the property manager, to build the technology, to start working on how we do experiences, not to rush. And only when we felt that we're starting to deliver on this promise of flow, on this community, on the mission, then we launched the brand. Once we launched the brand, a lot of investors started coming to us, especially real estate investors that wanted to buy real estate with us or for us because they knew that flow is able to deliver a higher return.